the month of October 2023, I tried to follow FX Alex G to grow $100 into $1 million, and I did.
Alright guys, so something amazing just happened. I just recorded a trade a few seconds ago. As you can see, this is the time.
Yeah, I'm sure you can see that too.
Guys, guess what? I have just been selected for the 30 days bootcamp. Yeah! Guys.
Now, in case you don't know me, I'm Mr. Sam. I've had my channel for about approximately 2 years and I've been doing a whole lot of things. But then I realized, hey, I'm a Forex trader. Why don't you go into the space of Forex? And I did. And my channel has grown spontaneously ever since then. But don't worry, that's not what we're here for. We're here to talk about something very serious. Now, if you're watching this video, you're most likely a Forex trader and you're most likely a beginner Forex trader. And you know, growing a small account in the Forex industry is not really as easy as it seems, but yet it's not also that difficult. Yeah, you could have good win rates, but win rates doesn't still guarantee success in the Forex industry. Yes, you could have the best strategy in the world, but yet the best strategy doesn't really guarantee success in the Forex industry. And also you could have a very good mentor and some of all this stuff, and they still do not guarantee taking a small account into a successful Forex journey. Let me just make this clear. There are supposedly two kinds of people watching this video. One, those ones who go, who does he think he is to tell me what to do? And they click out of the video and they still end up blowing accounts. And the other people who want to humble themselves and learn. And believe me, you're most likely going to grow your Forex account if you successfully watch this video up until the end. Now, the big question is this. What is the secret? Where is the secret to growing a small Forex account into a large Forex account? What do you need to know? And believe me, I'm not here to tell you anything about emotions. Oh, when you're trading, make sure your emotions are not involved, because the truth is, hey, we're all humans at the end of the day, so our emotions would obviously come into play. Your emotion is not the problem. The problem is this. So the reason I'm actually recording this video is just, to show where I'm at currently and to see how far I'm going to go, within how many years. So this is where we're at right now. We're trying to analyze our trades and let's jump right back into the market. Okay, so guys, this is Euro USD. So I'm actually trying to analyze Euro USD. I think the market should have opened fully by now. Now, the first problem is obviously funding. For the fact you're here in this video, you may not really have too much funds, in which I'm not going to blame you for that because it is fact. Believe me, growing a small account or taking $100 to $1 million is not as easy as it seems. It is easier to take $1,000 to $10,000 compared to taking $100 to $10,000. In the long run, we're very much aware that funding is really important and plays a major key. Aside funding, what else do you need to know to grow your small account? The rules that apply to growing a small account is very much different from the rules that apply to growing a big account. Anyways, a little bit different. When I say a small account, I mean $100 account, a $500 account. Literally anything less than $1,000. Whatever you've heard your guru tell you about growing an account, forget about it, okay? I didn't say do not listen to him. I said forget about it. That's not really what you need right now. What you need is to listen. Now, in the world of entrepreneurship, there are two kinds of people. We have the offensive and the defensive. Just like when you're playing a football match. It is clear that if you're starting out as a beginner, you really need to be offensive. You need to be aggressive. You need to do everything you need to do to break out of being in the small account. But not too aggressive that you're going to destroy your savings. Once you start getting into the $10,000, the $100,000, then you need to be a little much more defensive, so you're not going to be stupid and you're not going to blow up everything, because you can actually go from $1 million down to zero in the Forex industry. As a beginner Forex trader, don't play defense, go all in. Everything you have, go all in. I'll be honest with you, and you're most likely going to see some level of success. When you're playing a football match, at the beginning, your team, all they need to do is to try as much as possible to cross over the opponent's team and score. That is obviously going to be what is in your mind as the game just begins. Along the line, if you've been able to score maybe 1 or 2 or maybe even 3 goals, at that point in time during the second half of the match, or maybe even during the ending of the match, your team, all you need to do is
just be careful. Be a little bit defensive. You don't need to try and score again. Just be defensive that the opponent's team doesn't cross over to get a goal. That's the exact same thing when it comes to the world of trading. And now the next thing you need to know while growing a small account is make sure you have 2 time frames in sync. A whole lot of times when you're trading, you could have the weekly bullish, the daily bullish, and the 4 hours bearish. It happens a whole lot of times if you're in the forex market. It is best to have at least 2 time frames in the exact same direction before you could decide where you're going to take the trade. So if you have the weekly bearish and the daily bullish, it is not enough confirmation for you to jump into a trade. And like I said, at least 2. It could be 3, it could be 4, but 4 is a little bit more very unrealistic. So let's stick with 2 and 3. Having 2 time frames in sync gives you more confidence on where you're going to take the trade. And I'm going to give you an example from my monitor. So ladies and gentlemen, this is my screen and this is USD JPY. So from USD JPY, we can see that the market is on an uptrend. It's making higher highs and higher lows. So it is clear the market is on an uptrend. We don't really need to do so much, so we're not going to waste our time. We can see went up, came down, went up, and so on and so forth. So from the weekly, it's on an uptrend. Now if we go down to the daily, so from the daily, it's on an uptrend. We can see the higher highs and higher lows it's making. If we zoom in a little bit, so this is actually a clear uptrend from the daily time frame. Yeah, and then we can now go to the 4 hours. And the 4 hours, ladies and gentlemen, it is also on an uptrend from the 4 hours. This is actually a trade I'm expecting it to break above this level. It's for a different video. I'm going to explain that later. So I'm expecting this trade to break above. Sorry, let me get this. I'm expecting this trade to come here, break above this level, and then we take it to the upside. And then if we now come down to the 1 hour, the 1 hour is also on an uptrend. For USD JPY, they're all on uptrend, so we don't really have anything to talk about here. So let's go to a different pair. Let's check Euro GBP. Yeah, so this looks smooth, and this is also a trade I'm expecting, but it hasn't still gotten to where I'm expecting it to. So from the monthly time frame, Euro GBP, it's on an uptrend. And then if we come to the weekly, yeah, this is now what I'm talking about. And then if we come to the weekly, it is on a downtrend on the weekly. We can see, so the monthly is on an uptrend and the weekly is on a downtrend. So which are we going to stick with? We're not sure, because 2 time frames have different interpretations right now. So we need a 3rd confirmation, if possible even a 4th confirmation. That is when we're now going to go down to the daily. And now it's clear that the daily now, it's clearly on a downtrend. You can see, so this is a clear downtrend. And a whole lot of other things that we're expecting. As you can see, I'm expecting a sell from this trade, so I'm expecting it to break below here and retest, and then I take it to the downside, in which it is something that I am going to explain in a different video. If we come down to the 4 hours, the 4 hours is also, it's making some lower lows and lower highs, so it's also on a downtrend. So now from this, we have the monthly on an uptrend, the weekly on a downtrend, the daily on a downtrend, and also the 4 hours on a downtrend. So we have more time frames saying it's on a downtrend compared to an uptrend. So we know that as a trader, we are going to take this trade to the downside. So you should not be trading against the trend, especially as a beginner forex trader. And then the next step in which you can use to grow your small account is marking out area of interest correctly. Now, what do I mean? Area of interest are simply key levels, the places where the market would get to and bounce off. And we can see, I've already done some markouts right here. We can see this, I don't know what color is this, maybe purple. You can call it purple. So we can see this purple line out here. It's like an area of interest. If we come out to a weekly time frame, we can see that this is where the market has bounced out several times. 1, 2, 3, 4, and so on and so forth. It has bounced out a whole lot of times, and in respect, if we go to a different pair, a whole lot of times I mark out my areas of interest. We can see this is one of it, this is another. There are a whole lot of areas of interest, there are a whole lot of key levels. But marking out an area of interest gives you an idea of where the market is going to go and make a reversal. So an area of interest is just like a point where you as a trader, it's like a bus stop, you know, where you stand and wait for a taxi to come. And if the taxi passes you're not going to be chasing over the taxi because you know that another taxi is going to come. So these are the kind of mindset tricks and mindset games we should understand about the forex market. So if you mark out your area of interest perfectly, we know that the market is actually going to respect our setup. So ladies and gentlemen, this is XAUUSD, and I want to show you how I personally mark out area of interest. So you're going to get the idea that once you mark it out, whenever the market has gotten to somewhere around your area of interest, it's most likely going to slow down and break above it or make a reversal. These are one of the two things that will happen, but it's still most likely going to slow down. If it doesn't slow down, it means it shows no sign of stopping. So this is gold. Now we have to look at points where the market has gone to and reversed once or twice. A whole lot of times it is best it makes at least 2 to 3 touches, but still it may not make 2 to 3 touches. So someone like me, I would mark out the area of interest. We can see this is one of it. It's respected. And then we can see this is another one in which I was on this trade, and you can see the video if you go to my YouTube channel. I was on this trade like a few months ago. So this is another area of interest. So these are like the two major area of interests, and I think this is another one. So these are like the 3 major areas of interest. We can see how the market behaves around these sets. Now, under the subtopic of area of interest, we have 2 kinds of area of interest. We have a major area of interest and a minor area of interest. Or if I should rephrase that statement, we have a major key level and a minor key level. Now, as you've clearly seen from XAUUSD, I have marked out the major key levels. Now, let me mark out the minor key levels. Marking out the minor key levels, there are a whole lot of key levels you can see here that could be minor. Let's check. I'm going to use a different color tool to mark out the minor key levels. So if we come down to the 1 hour, we can see this is a minor key level. Let me adjust that a little bit. So you can see this is a major key level, this is a major key level, and this is a major key level. Then this other one here is a minor key level. So you know that once the market gets to a minor key level, it is not really going to be as powerful as a major key level, but yet it is still respected. I don't know if that makes sense. So minor key levels are key levels that you also need to pay attention to. Look at what we've seen now. The market is making lower lows and lower highs. It broke below this minor key level, retested, and it's coming. Now it has broken below this major key level, and guess what it is doing? It is retesting. So clearly, the next thing gold is about to do is obviously to pump to the downside. And seems like I could get into this trade. I don't know, because gold will most likely pump to the downside here. That's the only thing gold is most likely going to do. I think I'm going to enter this trade because I didn't even see it coming, but yet I still need some confirmation before I enter the trade. So we're going to go down to the 45 minutes or even the 15 minutes just to find some entry signals, in which I've not really gotten an entry signal. To get an entry signal, I would like a head and shoulder or inverse head and shoulder. But you know gold is a little bit different from other pairs, so you may not really get the entry signal you are expecting. But one thing I'm sure is gold would most likely go to the downside, and I'm going to enter this trade within the next 6 minutes. If this candlestick closes, we can see it this ginormous move. So when this candlestick closes, I'm going to see how the next one opens. Then we're going to most likely enter the trade to the downside. Now, I've talked about area of interest, and I've also spoken about major area of interest and minor area of interest. So once you're jumping into a trade, you should mark out the areas of interest so your small account is actually not going to be wasted. And then the next thing we're going to look out for, in which is similar to area of interest, is buying points and selling points. Now, what do I mean by buying point and selling points? There is always a place in the market in which you should jump into the trade, buy or sell. I mean, that's what we do in the forex market. And yes, aside from area of interest, what else again are we going to call this? It's something different, but I'm going to show you in a minute. So this is Euro AUD, and I'm using different pairs to explain this idea, so you're not going to do a whole lot of rubbish when you get into the markets. I hope that makes sense. So there's a rule of thumb in the forex market that says buy low and sell high. Just like an investment, it's not really going to be the best time to buy into an investment when it's in its highest point. That's going to be so foolish. For example, a whole lot of people decided to buy Bitcoin when it has gotten to its all-time high. I mean, there's nothing absolutely wrong with that. But then again, people who bought Bitcoin 2 years ago when it had the massive bearish drop and it was at $16,000, those people are in more profits right now because obviously they bought low. Now, if you come into Euro AUD, you're meant to buy low and sell high. Now, one thing you need to do is mark out your high points, your swing highs, and your swing lows. So where or which point in the market do you think is high that we're going to be looking for selling opportunities? So we're going to mark them out. This obviously is one of them in which you can see. I'm going to change this to red. Yes, let's start with that first. So which other point looks high that we're going to look for? Remember, we're selling at the high point and we're buying at the low point. So which other point looks high? Here, of course, this is another swing high. This is a lower high. So this is another high point. Which other point is high? Yeah, it's another high point, but I don't really want to go into that. Which other point is high? I think here also, these both are high points, so we can stick with this. Okay, this one is higher. So let's stick with this one. Sorry. So let's stick with this one. And then remember, we buy low and we sell high. So we're going to look for the low points in which we're going to buy. So the swing low right here is obviously this one, in which you guessed it. I hope you guessed it correctly. And we're going to change this to blue. And then which other point is low? We absolutely have this one. Now, this is a high point for here. And guess what again? This is also a low point. So I'm going to shift it a little bit below for this angle. So now, one thing you need to know right now is where a high point and a low point meets is your area of interest. It's a very good area of interest because your low point meets here and your high point meets here. Another good high point and low point is right here. We can see this a little bit. So this is another area of interest. So this is a minor area of interest. This is a minor area of interest. Okay, this is actually a major area of interest because we can see this one here. And this is an inverse head and shoulder, in which I'm not really going to explain that right now. But if we now want to rule out the areas of interest, we can see that this is a major area of interest. And this is another major area of interest. So we can now delete this, and delete this, and also come here to delete this. The way I explained it, I hope it makes sense to you now. Like I said, remember, we're going to buy low and sell high. Now, a point where a low buying and a high selling meets together, that is going to be your major area of interest. There are some other points too that can be a major area of interest, but it's not really good enough to mark. But these two are your major area of interest. Now, we obviously are very much aware that Euro AUD, if we had bought Euro AUD here, it's going to the upside. Yeah, Euro AUD is going to the upside, and it's not going to stop until it gets to the next area of interest, in which I'm not really going to start looking for it right here. But I hope this makes sense. And then the next one we're going to proceed to is risk to reward. Now, as a newbie or as a beginner trader trying to grow your small account, one thing you need to understand is a whole lot of times what the big traders do, you're not meant to do it, especially when it comes to the risk to reward. You need to look for that sweet spot where you're going to get the best risk to reward, because a professional trader could be looking for a 1:2 risk to reward, and I'll be honest with you, I'm not really a big fan of 1:2. As a newbie, you need to be looking for 1:3 or 1:4 risks to reward. Anything less than 1:3 is too small. Anything more than 1:4 or maybe 1:5, anything more than 1:5 is too much. I'm not really that guy that likes 1:8 because a whole lot of times you can almost not get a 1:8 risk to reward. It is unrealistic. So let's not even go there. So 1:3, 1:4, that is the sweet spot. If possible, if you can get a 1:5, perfect. But you should not be looking for anything less than 1:3. Let me give you an example. For example, this is a major key level as we've seen. Now, if we want to go for a long position and we came here to take this trade, so because we've marked it out correctly, and we've taken it up to this other key level. So this is a 1:4 risk to reward, and this is a very good example. This one is a very good example. If you want to draw this line a little bit backward, and we see that this line meets, we can see that this line meets with this line, so it is a perfect trade, and we want to go for a short position. Then we take the trade from here, and when we take the trade from here, putting it a little bit above and back to this exact same area, so we can see that this is also a 1:3. So like I said, 1:3, 1:4, you should not be looking for anything less or more than that, because hey, you have a $100 account or a $200 or maybe a $500 account. You don't want to be placing trade that is going to take your account instantly. And then the next thing I'm going to talk about, in which is very important, is lot size. Now, you know, a whole lot of times you see these master traders making in 100 lot size, and you know, some of these massive lot sizes in which you should not even think about as a beginner trader. And I'll tell you, if you have anything less than $1,000 account, it depends on your personality, okay? If you're the kind of aggressive, if you're the kind of offensive player, the kind of person who wants to go all in, and you have $1,000 account, I don't suggest anything more than a 3.0 lot size. If a 3.0 is too much, it's because of your personality. You know, you're that offensive and aggressive trader. And listen, remember, the people who play offense the most are those who get wiped out fastest. So you should not really want to play offense so much. Sometimes you play offense and you play defense, but yet your personality is your personality. So if you're more on the defense side, and you know, you have $1,000 account, 0.5 lot size is perfect. I don't think you should be going less than that if you have a good strategy and if you're confident in yourself. And ladies and gentlemen, I know I'm going to speak more about that. If you're not really sure about lot size, then I mean, you can use a lot size calculator, in which I don't recommend. I've never used one before. I mean, I have a brain, so I don't need to use it. At the end of the day, you need to focus on growing your Forex account. Stop focusing on flipping, okay? Forget about what you see these gurus do. Forget about the Lambos, the Rolls Royces, and the Mercedes Brabos and AMG G63s and some of these cars and lifestyles. They're literally fake. Forget about a whole lot of them. Focus on yourself, and in the year 2025, you see yourself beating your goals.